Hello, everybody. We're back. Due to a holiday and a snowstorm, we've been off for 2 weeks. Trust me, I'd rather be doing this show than snow blowing my house when there's like 4-foot snow drifts during blizzards.
Insane. It got insane.
I think the seventh worst blizzard in terms of snow in Central Park. 19 and change.
We feel it for sure.
Yeah, you're like, I don't live in Manhattan to deal with snow. I get it, Nadler, but you know.
I hate that they keep making new names for these snowstorms. Like when we were growing up, it was a snowstorm. Now it's like
blizzard.
A snow bomb.
I know.
Nor'easter.
Blizzard.
Yeah.
Bombogenesis.
Superstorm.
My brother follows this stuff. I'm like, you're just making these words up. And he's like, no, these are actual technical words. Because nobody's going to watch the news if they're like, it's going to snow.
Exactly.
But it's like, it's bombogen. It's like, oh no, that sounds really
No one
good.
watches the Weather Channel when it's 80 and sunny.
That's
They're
right.
gonna watch it when there's a massive, massive snowstorm.
And, we did have a couple of warm days. Now it's freezing again. So
That's par for the
walk
There
course.
you
You
go.
get a random nice day, like the beginning of March, you think it's over, and then they hit you with another week of cold.
no, it's going to be in the 40s the rest of the day. It's going to rain. That should wash away some of the
Next
snow.
week, Tuesday, 70 degrees. I saw it.
Cool. Let's do the podcast outside.
Let's do it.
All right. So one of the biggest things that happened while we were away is USA Hockey. Now there's
I
nothing.
thought we were gonna say that you had a birthday. But
I
you
did
went,
have a birthday.
You went right to hockey.
Well, because that was more fun than my birthday. My wife works in a school, so she was going to Florida because that was winter break to go see her mother. So she wasn't going to be around for my birthday. So I'm like, I'll go see my mother in Texas. So it was nice. Had a couple of lunches and dinner with her, and saw my brother and his kids. Saw my niece in a production of Chicago. She was phenomenal as Velma.
Excellent.
Although you don't necessarily want to see a goddaughter, in that play. But outside of that, it was very good. Sarah, you did a wonderful job. But USA Hockey, there's nothing I like more than Olympic hockey, especially when the pros are playing. And congratulations to the men's and women's teams who both beat Canada in overtime.
Electric.
Stick the dagger in those Canadians. We're taking your sport over. That's it. It was such an amazing game. I know that John Cooper said he didn't like the 3-on-3, but if they won, I don't think he would have said anything about it. You guys look bad. You were beat by two pairs of brothers. You have the Hughes brothers who were unbelievable, and then the Kachuk brothers who could disrupt anything.
Did you see that in Miracle about the 1980 U.S. team?
Great movie.
The last person cut on that team was Jack Hughes. The guy's name was Jack Hughes. So there's a scene where they seem crossing out the name Jack Hughes.
Well,
it's incredible.
The last person cut from the 1960 gold medal Olympic team, Herb Brooks. So he came back 20 years later to win. It was great to watch. The chemistry of both the men's and women's teams, phenomenal. Apparently they hung out together a lot. The celebrations were amazing. Watching them take over that nightclub in Miami. Were you there?
Yeah. I was not.
I thought you missed Miami.
I thought one of the
there.
classic parts also was his teeth getting knocked out in the middle of the game.
No, but the scary thing was, and he admitted this, so he gets the high stick, the double minor.
Right.
And then he takes a penalty that gives Canada another power play, and he was sitting in the box saying, man, they're going to hate me. And then people forget that on that play, his brother went for a poke check to get the puck out. If he misses that, Canada's got a 2-on-0, and it's over.
Right.
But then again, this is the same team where McDavid and Celebrini both missed breakaways. Nate McKinnon missed a wide open net, and they blew a minute and a half 2-man advantage. So you complain about 3-on-3 all you want, John Cooper. You guys choked. And
I would say sports really brings people together. I was in Paris for the 2024 Olympics, and there are people where you could be in New York City in an elevator and not talk to anyone that's there, but you're at the Olympics and you're wearing a USA shirt, and all of a sudden you're hugging people that you've never met before. It really brings everyone together, and it's such an incredible experience.
Well,
and
look
this
at
team
some of
here,
the guys, like Matthew Tkachuk is one of the most hated guys in the NHL because he's an agitator. He was teasing Leon Draisaitl when they played Germany, saying, "Oh, he's a bridesmaid, Leon," because the last 2 years Florida's beaten Edmonton in the finals. But everybody on his team loved him for that tournament. Now they can go back to, I can go back to booing Charlie McAvoy now.
Of course.
And congratulations to the McAvoy family. My wife works with his mother, and she's very lovely, and it's a nice family. Sister works for the Rangers. The day McAvoy gets traded to the Rangers, I'll get his jersey, but, I know he'd probably stay in Boston.
A bobblehead, maybe.
But watching them, and the partying and the cigars and the drinking, it's like those are hockey players.
Yeah.
It was nail biting. Congratulations to all the medalists on the USA team. The rest of the country is none of my business, but it's great to watch some of that stuff. You appreciate it.
It's exciting. It also brings a little bit of national pride, which I think we're missing a little bit these days.
Well,
I think it's good to see
you
that.
can bond behind these teams, and everybody's rooting for the same people, even if you don't like the sport. It's just, it's been 44 years since a gold medal, 46 years, sorry. And it's a coincidence, the anniversary of the day they beat Russia in 1980, which a lot of people think. Two misconceptions about that. That wasn't the gold medal game.
That wasn't the gold medal game, right?
And that game was not shown live. You don't remember this because you weren't born. But they showed it on tape delay. They were so sure that USA was going to get completely creamed.
Wow. I didn't know that
they
either.
didn't show it live. So you had to avoid, which was easier back then, avoid finding out the score.
I mean, we'd be remiss not to mention the curling controversy as well also, right?
I thought that was funny when he's like, I'm not doing this. Like, well, I'm going to show you.
Show you. Here's a video of you doing it right there.
So what are you sending a telegraph? It's like, come on. In this day and age, you're going to lie about it?
I was going to say, everything's being watched. Everything's recorded. I don't know how that guy can come out and confidently say, I didn't do that.
Yeah.
I don't get curling. I mean, I don't. I'm surprised we're good at it. You think we'd be terrible at that because we're not good at a lot of the cross-country skiing and all that stuff. But I like the snowboard. I like watching.
It's amazing what these athletes do. It's
the
amazing.
jumps that they do. That's amazing. And the hockey tournament was phenomenal. It's great to watch. You see how much they want it. Even in the basketball, it doesn't seem like the men's, like they just assume they're going to win. It's become a lot more competitive. But you see Jack Hughes, getting his teeth chipped and he's bleeding out of his mouth. He's like, all right, I want to be on the power play. And he was.
Right. My college roommate and I'm an NBA guy. He was always a hockey guy. I never watched hockey until I met him. And we always talk about how hockey guys are the toughest athletes.
It's not even close.
Where these guys get their teeth knocked out and then they're coming back and hitting game winners, and NBA guys are out, or baseball players are worse than NBA guys, out because of an ingrown toenail.
There was the Rangers were playing in the playoffs. I forget what year it was, and Derek Stepan got his jaw broken by a former teammate, just a cheap shot. But it's a playoff, so he's back the next game with a cage and a broken jaw.
It's insane.
In a game where you're hit all the time. All right, well, that's the recap of everything. Yeah, and I turned 56. Outside of that,
And happy birthday to my wife yesterday also.
A lot of birthdays.
by the way,
Love it.
Shari Sedge. It's been 2 weeks. Maybe they forgot. Sedge Zuckerman, Scott Nadler, Cross Country Mortgage. Greg Heym, Brown Harris Stevens, and Ray Lena, also Brown Harris Stevens. We're going to get going with the economics, and we have great news on mortgage rates right after this set of important messages.
Do you have a big move coming up? I'm Scott Nadler with Cross Country Mortgage, and I've got the loan to match your dream home. Whether it's your first or your fifth, I'll make the process quick and easy. Call me today. Let's make it happen.
Sedge & Zuckerman is a boutique residential law firm guiding you and your clients every step of the way with a solution-oriented approach. Make sure to work with a deal maker and not a deal breaker. Contact us today at sznylaw.com.
And we're back. We're so excited to be back. Woo, woo. Wow, that's as much emotion as I've seen out of Shar in episodes.
How many in-studio episodes have we had this year? This might be just our second one.
Third one. I think it was
third one. Yeah, we had one with you, one with.
We did a live.
Well, we
one.
do live, and
the live ones we had.
January and February, you have these holidays, and we milk that for everything it's worth. So, well, I milk that anyway. All right, so we start with you, Loan
sir.
Daddy, cleanly shaven Loan Daddy. Can you believe? Look at his baby face. He's so cute. He got his hair cut. It looks
I
like too.
regretted that decision the second I walked outside. I was like, A, Greg is going to make fun of me. Number two, it's freezing outside. I'm feeling it.
I had like the in hockey they have playoff beards. I had that.
Did you really?
Well, because of the snow, it wasn't a playoff thing. Because I was like, I'm working remote. I'm not going to shave.
Support the team.
So I gigged Friday with a
rally beard.
but then I shaved yesterday, knowing that I didn't want to have to shave off like a decent sized beard.
I didn't get the memo.
That's right.
My
We
wife
still-
likes a little scrub.
Unfortunately, we still recognize you. It's okay, Sean. All right. So the big news, Mortgage rates last week below 6%, 5.98. We'll take it. Lowest level since September 2022. A year ago, rates were 6 3/4. So this is great news. How was your week last week? Was the phone ringing?
A lot of phone calls, a lot of text messages. There were clients prior to last week who were eligible for rates below 6%. I think the consensus, though, was for your typical client putting 20% down, an average credit score, rates dropped a bit to this range here, under 6%. I think what was interesting about last week, though, was that range that rates were trading in didn't vacillate virtually at all. You know, normally rates will hit a low and then bounce right back up to, 5.9 to 6.1 to 6%.
And how long does that happen? Like hours or days?
It can be in the same day. Like I could quote someone at 11 a.m. and speak to them again at 3 p.m. and the rate can move. What was interesting about last week, though, they didn't move. And it was such a breath of fresh air for someone in my position where you're not looking at the market all day long thinking like, I wonder what's going to happen here. Rates just stayed very, very steady. And that was, we hear about in their headlines, we just talked about the weather. With rates, it's so quick to put a headline out there that there's a record low or the lowest since 2022. But this is a real change where it was the first time in 15 years that you saw rates change in such a narrow range for an entire week. That's what was really, really interesting.
Well, we've been talking about rates becoming more predictable over the last couple of months in that range, a broader range. But, when I wrote in the blog, Thursday we were all excited when Freddie Mac data came out. We knew rates were going to be lower. And then I had warned in the blog, which came out Friday morning, that it's got to watch out. One bad inflation report or hotter than expected jobs report. But that didn't happen, right? Maybe because it was PPI. If it had been CPI or PCE, see how I throw these initials at you on Monday morning, Shar? He throws legalese at us, so he deserves it. But, it didn't happen.
Right.
Because we're balancing a lot of things right now. You have, the concern about inflation. We're going to have a jobs report this week. And, oh, by the way, we have a war going on.
Right.
So how much volatility have you seen in just the last couple of days? You're saying it's staying narrow.
So everything flipped. Once the war broke out, now you're seeing rates change, where this morning we wake up, mortgage-backed securities are up 25 basis points. The 10-year Treasury goes up 6 basis points. What does that translate into mortgage rates? Probably 1/8%. In some cases, maybe 0.25%. What was interesting, though, and we were just talking about this earlier, since 2020, we had Soleimani, we had October 7th, you had Operation Midnight Hammer, where the U.S. went after the nuclear sites in Iran, and then over the weekend, we have this war breaking out. In each instance, well, in this one, we're not sure yet, but in the previous 3, we saw oil prices go up pretty quickly, and then you saw the 10-year follow. So the 10-year Treasury goes up, and mortgage rates tend to follow the 10-year Treasury. In each of the previous 3 instances, mortgage rates went up, and then a week later came right back down to where they were in the previous week. So it'd be interesting to see if history repeats itself there, and we see interest rates go up a little bit this week and then come back down next week.
Well, the mortgage rates going back down makes sense to me because a war breaks out. Stock market is very volatile right now. You're going to want to put your money in secure assets. That's U.S. Treasuries.
Right.
Demand goes up, price goes up, rate goes down, right? With oil, it's a bit surprising, being that we're the largest producer of oil in the world. It's not, but that oil there is important to the rest of the world a lot more than us. China, Japan rely on that.
Being that global economy, I think that's what you're seeing here.
So it's been kind of crazy. Now, are you expecting a surge, Shar? Now that he's
Sarge, is there going to be a surge?
Sergeant Shar, is there going to be a surge in she cells by the
I think the one thing that you said that was excellent in your
just one thing
in your
Lena, just one thing
in your concise article this week.
You read it?
I read it.
Wow.
I read it. Was that now the rates are under just under 6%. Don't be the guy who's waiting for them to come down to 5.5.
Right. So I gave 4 things that home buyers need to know. Number 1, this is the moment you're waiting for. If you're ever going to get shoved off that fence
drum roll
by these guys, that was it. 2, don't get greedy. and say things like, I'm going to wait until they fall below 5.5. And that's when I mentioned that one bad inflation report could change this.
Right. Or a war.
Number 3, don't wait for the Federal Reserve to cut rates. They ain't doing it. They're not going to do it till Warsh is installed. And even then, with inflation, we'll see what the rest of
The Fed Governor Stephen Myron came out this week, said he's hoping for 4 quarter-point cuts this year. We'll see if
that would be unbelievable.
I agree.
And remember, that doesn't mean mortgage rates go down. It could have the opposite effect. And the other thing is, NAR did one of their economists wrote an article a week or two ago saying, that March brings the biggest spike in home sales, because the difference between January and February isn't that big, but February to March, it's like bonanza time. So you got to get out there, right?
Absolutely.
Is your phone ringing off the hook?
So
Phones don't have hooks anymore, but if they did...
we need a new phrase for that, I think.
Yeah, if you ask a little kid,
actually, you say I'm getting text now,
mimic answering a
Texts are
phone.
blowing
We
up.
used to do the thumb and for those that are listening, by your ear like that, picking up the phone. Now they put a full hand because that's what it's like when you answer a phone.
Because the phones,
you don't have the hook in it. You don't have the.
I've
thing
been
on it.
watching reruns of one of my favorite shows, Las Vegas. You get to
Very
like
nice.
20 years ago. The phones were like the size of like a tic-tac thing, right? And they have to flip it open. Now it's like you need 2 hands.
The Zach Morris phones
Right.
again.
The Zach Morris. Well, no, they're not as fat as those, but they're much
They're
longer.
big,
The
yeah.
screen size is huge.
It's a
But-
computer, it's a phone, it's...
What we've seen
lot.
is that in talking with loan officers, I had one loan officer who told me that she's taking, she's reallocating her resources to contacting older clients who have been eligible for refis for some time, who are sort of pushing it off and saying, all right, now's the time where you're going to where you need to move quickly on this because the savings are more significant. I've seen clients who are sort of on the sideline stepping back in and saying, okay, we feel like things might be a little bit more affordable now. Let's find something to buy. But the biggest reaction I've seen are the people with accepted offers who are waiting to sign a contract. And usually there's about 2 weeks these days from accepted offer to signing contracts, where you're doing due diligence, negotiating the contracts, and making sure everything's in order, where those clients are saying, let's get this into contract as quickly as possible so I can lock in this rate, because they don't want to lose that opportunity like we talked about. Now, what's the story with lenders that you work with, or are you able to lock in rates in any situation before a contract is signed?
If we have at least a draft of a contract, we can
Right.
lock it in. So something just to show the address and the purchase price and loan amount. We know those things can change. Obviously, the address probably should not change because we're going to need that in the application. But yeah, so once we have that in, we can lock. The challenge comes into play when it's a co-op and you're unsure of that closing date because we're at the mercy of the co-op board and their timing. With that being said, we're also not in such a rush to lock someone in right now, right? Rates are, putting the war aside for right now, rates are fairly steady and trending downward, so we're not in such a rush. On the refinance side, though, we'll talk to clients who say, how much does my rate need to drop for it to make sense for me to refinance? And number one, everyone's situation is going to be a little bit different. What moves the needle for one person may not move the needle for someone else. And it depends on what their goal is, right? Someone who has a 30-year fix that they took out a couple years ago, maybe they want to refinance into a 15-year fix and pay this loan off a lot faster. Their payment's going to go up, but the term of their loan shortens.
Right.
That break-even point, right? How much are they paying in costs, and when does the savings equal those costs? So we spoke to someone recently who is eligible to refinance and save $500 a month. And this goes to your point, which you wrote about beautifully.
See, I made 2 points recently. Go ahead.
Regarding not waiting, right? There's a cost to waiting, right? So if this client in particular, if they wait 6 months, they just threw away $3,000, right? So if the rates go down another 1/8% or 1/4%, yeah, you could save a little bit more. But what about the 6 months previously that you could have just saved $3,000?
Right.
So going through these scenarios with clients, and we're seeing a lot of refinances pick up. I mean, the numbers are, nationally, it's up, I forgot exactly, 180%, 190%.
Now, what about people that, a lot of baby boomers and maybe some Gen Xers have been wanted to trade up or down, but don't want to give up their mortgages? Do you see those people saying, all right, I know that I'm not going to get what I had, but this is good, and I really need to get that bigger house? Are you seeing a lot of that, or is it more first-time buyers? Do you see the mix changing at all?
I'm seeing more of those clients. Look, it's a little bit easier to go from 3% to something in the higher fives versus 3% to 7%. Like that's so
Absolutely.
the fact that rate has come down, life happens. People need to downsize, they need to upgrade, they're having a kid, they're getting divorced, things happen. But I think by and large still, those people who have rates that are sub 4% are not so interested in moving, assuming that their situation hasn't changed.
But if you're an empty nester and you're going from like a big house that's empty now to a smaller apartment, your loan amount would be coming down significantly.
It's more about the monthly payment.
Exactly. So you might be downsizing. Your rate may be going up 1.5 points, but if you're cutting your loan amount in half, it very much bridges the gap over there also. So it's all about the numbers, and the best part is they can just call you for free. You'll run the numbers for them and tell them what to do.
Well, we're focusing too much on something that at the end of the day, the rate is the rate. How much is that going to cost you? And we talk about this all the time, that people get fixated, not going to wait. It's going to come down, 10 basis points, 15, when that savings is hardly even noticeable.
Right.
And prices could go up during that time. That's the other thing we always point out. Well, you're waiting on the sidelines for your rate that you just decided that's the rate you want. Other people are going to jump in because it's that time of year, and they're ready to go. Prices are going to go up. Inventory is picked up, and it certainly goes up this time of year. But there's still a lot of demand out there for housing. We keep hearing all the time about housing affordability and everything. And people are going to have to move. And that's the longer you wait, you talk about refinancing, it's the same thing with buying.
Right.
Right. One of the things we've always talked about is when rates drop, we should expect prices to go up. How long do these rates need to be?
Depends. If rates are dropping because we're in a recession, you don't expect prices to go up. But being that the economy is still growing, although the growth in fourth quarter was weak, but a lot of that had to do with the shutdown, which is, a record-setting shutdown. So these things don't happen by themselves. Inventory controls prices. People say, well, demand's the other half of that. But as we've seen, you could have strong demand, but if you have no inventory, you have a slow market.
Right.
And last year was a terrible year for home sales. So I think that, with the prospects for job growth not great, I mean, it's the no hire, no fire. That's what Shar says to get himself loose before as soon as we're about to hit the record, he's like, no hire, no fire.
No fire.
That's the people uncertainty about jobs. And we're going to talk about something that was interesting in part 2 of this podcast.
I didn't think about this until you just said it before. Contracts are getting signed a little bit faster now. And it's amazing how we're so quick to blame management companies for things taking so long, but now all of a sudden you see a drop in rate. Now everyone wants to move very, very quickly.
Rushing. Yeah.
Are you pushing them to do it fast so they don't change their minds? No, I'm just kidding.
Absolutely not. The old adage that brokers always say that time kills deals. I don't know if I told you this. The flip side that I made up is that rushing and cutting corners creates malpractice suits. And we're the ones who get sued, not the brokers.
As you should. We can see the irony of lawyers getting sued. Like that is, and he's a deal maker, not a deal breaker.
That's right.
And that's a good segue into some more commercials. We'll be right back after these messages.
This beautiful set here at Studio 1873 is brought to you by the Everset. The Everset provides full-service staging and furniture rental solutions in the New York area. For more information, please visit us at staging.theeverset.com or email us at staging@theeverset.com to request a free proposal.
Looking to stage a property but on a tight budget and timeline? Stage with Stage and Fold. Stylish, lightweight, foldable, 3D printed cardboard furniture that looks real. Quick delivery and easy assembly. Staging starts at just $199 a month per room, and setup takes less than 30 minutes. Contact us today to stage smarter, sell faster, save thousands with Stage and Fold.
And we're back. Hope you enjoyed those commercials. I don't even know what they are, but when I watch it back,
that last one was great, actually.
It couldn't have been yours then. All right, so
why do I keep coming back?
Because you love
it.
the abuse.
Love
what
it.
can I say?
Let's go.
Same reason? No, never mind. I was going to make a marriage joke, but not that my wife's watching. Don't tell her to watch. Anyhow, all right. So The Wall Street Journal recently did a report card on the economy for last year. You know, new administration. Let's see what. Yeah, and they graded it on different aspects. So it's basically like.
Did you agree with this article, or did you have
Well,
gripes with
we're
it?
going to run through this very quick because there's like 8 or 9 things.
Because tariffs can go one way or another with.
So the
media.
first thing is jobs, right? And they said needs improvement. Obviously, only 181,000
Understatement.
jobs created last year. We used to do that a month. So
Yeah.
anybody knows we're in a no hire, no fire. Copyright Shar said Enterprises. That that's not a surprise, and I think we'd all agree we'd like to see the job growth pick up. But here's the flip side of that: unemployment exceeds expectations. It's only 4.3%. That's the other half. No
back.
hire,
No
no
fire.
fire. Jobless claims still very low. If you're looking for a job, it's very tough right now. But we are not seeing the mass layoffs.
All right.
That
in like a quick summary, like what policies can change to ensure job growth?
it's hard because you have to convince CFOs that things are going to get better. Because the only reason they're going to spend money to hire people is we're going to expand, we're going to, build a new factory, we're going to try to go into this market, is that they're optimistic about the future. I think right now...
Incentives also,
there's
right?
Well, yeah, you could...
Tax breaks for small businesses or big
Right.
corporations of what they can do to incentivize hiring. And
It's also hard, too, because a lot of, if you're a retail company, minimum wages have been raised all throughout the U.S., so labor's a lot more expensive than it's been.
Right.
And wages in general have been rising significantly more than prices. So it's very hard. A company, you want to do the most you can with the least amount of employees. And they're very quick to lay people off when it's bad. They're very slow to hire them when there's uncertainty.
did you see Jack Dorsey's
Yeah.
tweet? So they laid off 40% of their workforce. And, he had this whole post. It was actually really interesting. I mean, he talked about how basically AI is taking a lot of these jobs and everyone's going to get, he's giving, 6 months of their salary for them and covering benefits and helping them find employment elsewhere. But I mean, this is a real thing that is happening. And to your point, they could be as efficient, if not more efficient, with 40% less of a workforce, and their stock went up like 20% the next day.
Well, that's the thing. You're almost rewarded as a CFO or a CEO to cut
jobs,
because then it's going to make your profit
Payroll
look
goes
better.
down, right.
All right. So inflation, they said, shows promise. I mean, it depends which one you look at, but core CPI, the ones we have the latest data for, I guess, up 2.5% over the past year. Mm-hmm. That is certainly not bad. We know that because of housing, we have the sticky inflation, and it's, people say, well, we had the soft landing. We still haven't reached it yet. That's the thing people forget. And until you get to 2%, technically you haven't hit any landing. But I think that we're confident that we're getting close enough that we don't have to worry. Although core PCE was 3% in December, but that was December.
Right.
It's March now.
March,
right?
yeah.
So who cares? Wages satisfactory. I would have said a little beating expectations because wages are still
Higher than
growing
inflation.
more than 1% higher than prices. Mm-hmm. So that's pretty good. But that's only half. You look at wages and you got to look at hours worked, and hours worked is always the part of this that gets missed. But that was up in the most recent data. We'll see what Friday tells us. This one's easy. Stock market obviously exceeding expectations. Doesn't seem to care what's happening. Winning double digits 3 years in a row. It's funny, coming off of 2 years of 20% plus growth, you would have thought last year minimal job growth, that all the panic around the tariffs and what that was going to mean for the economy, government shutdowns, and you go, no, double digits again, because it's about the future.
This is why I don't understand why there are so many all cash deals in the market. It was a big percentage of transactions last year were all cash. I'm not saying this as a self-serving announcement because I do mortgages. That's fine. Our business
that couldn't possibly
is fine. There are plenty of people that cannot buy homes all cash, but the people who can, those people are probably invested in the market. Right. And if you're buying a home for $2 million, and if you take $1 million mortgage, and the other $1 million you keep in the market and have the money grow for you. I mean, people like Buffett are borrowing up people's money, right? So I never understood why there's so many all cash deals unless someone just absolutely cannot qualify for a mortgage based on their finances. But we talk to people every so often who will get pre-approved, and then they'll realize they can get gift funds from family or do something, and they'll just buy their property in cash. And it's like you could take out a mortgage after the fact, and you could
one theory
diversify your assets a little bit better.
One theory I would put forth, well, I sound like I'm in a Shakespearean play, is to get the deal. You know, we've seen luxury markets are
so
on
closing
fire.
cash and take financing out after the fact.
You could do that for sure, but you know, someone's selling a $5 million apartment. They want cash. They want out.
Yeah.
And obviously here in New York with co-op boards, it has to be cash a lot of times.
For sure.
But no, the thing is like, well, I'm getting double-digit returns on my stocks. 6% mortgage rate sounds good to me.
Correct.
Right.
Correct.
All right.
And you're also paying capital gains on any profits you make when you cash out.
Right.
Right. But as much as we don't like capital gains, it does mean you made money. Right.
Yeah, but you don't have to pay it now.
Right. You don't.
Right? You're losing a position and you're paying taxes.
Right.
Well, that's why they have lawyers and accountants to tell them how to do all this stuff the most tax avoiding way. Not evasion, avoiding. All right, economic
I hope
growth.
a lawyer takes your job one day.
You already took the chairman of the Fed.
That wasn't your job.
It should have been.
It could have been.
Yeah, come on. The post-meeting conferences press conferences would be awesome. You'd love it. I'd have you guys up there with me. If I got tough questions, you have to talk to my attorney.
Can you imagine all of a sudden there are other economists doing podcasts with Gregory's?
Oh, man, not my bobbleheads. Big win for St. John's against Villanova. We're not going to mention the UConn game. All right.
Focus.
Economic growth acceptable. Now, the shutdown, you could argue about, was it a percent subtracted from fourth quarter GDP? But considering how few jobs you added to have economic growth, over 2%, you'll take it. Trade deficit. Now, this is interesting because the whole idea of tariffs was to kind of level the playing field. Didn't happen. Deficit in goods, record $1.24 trillion last year. Manufacturing, again, we were told that would bring jobs back. You know, it's going to take time, but needs improvement. Employment in manufacturing fell for 8 straight months after the tariffs were announced.
Right.
And the final thing, and this is the rage these days, housing affordability. And for good reason. People need to live. They need to have affordable housing.
I think affordability in general, but yeah,
Right.
that seems to be the biggest.
Well, I think we've made progress on a lot of we've seen oil prices before the war go down. Not so much natural gas lately. I'm getting killed in my heating bills. But food prices for certain items have come down. You know, we're looking at 2.5% to 3% year over year, depending on how you want to look at it. That's improvement. But that hasn't happened with housing. You know, rents are still going up. Prices are for single-family homes, according to the Case-Shiller, was up less than 1.5% last year. Mm-hmm. So, but still, when you're at a record and you're going up even 1.5%, that's
Right,
less
right.
affordable.
Right.
How much of that do you come across where you're trying to talk to someone, hey, rates are good, you know, this, and they just say this is unaffordable? Do you hear that word a lot? Even with people buying $1 million, $2 million.
I think people sometimes will have a target as far as what they want to spend on their monthly housing expenses or have for their monthly housing expenses. We say to clients all the time, we're going to work to see what we can get you qualified for. What's the maximum that you can qualify for? And then from there, you know, then I could talk to an agent and say, but they have all this debt. How are they going to afford that? Like, that's not my job to start, is to figure out what's the max that they can qualify for from the lending perspective. Whether or not it's practical for them, that's a separate conversation that we're going to have with them. But to start, let's figure out their max. And the good thing about co-ops is they're oftentimes stricter than banks are all the time, right? They have a stricter debt to income
In
ratio
Manhattan,
requirement.
it's 100% of the time.
So if you can pass a co-op board, or you have a profile that's set up where your agent and your lender both think that you can pass a co-op board, it's probably affordable for you. Yeah. But yeah, we have these conversations all the time.
Yeah. That's also why when we had the housing crisis, co-op owners were, I don't want to say they were immune to those issues, but they were protected because there was a second layer of somebody thinking with common sense, can you afford this or can you not? But, you know, aside from affordability just on the lending side, what you said was very important also.
3 things
You
I've
still
said
have,
importantly enough.
You still have your water bill, your electric bill, your heating bill, you know, if a pipe leaks, there are other expenses that have
Insurance.
to be factored in.
People overlook
Insurance
there's
is
been
insane.
article upon article because you look at the cost of everything. I mean, insurance, particularly if you're near water, like I am in Long Island, or obviously Florida and areas like that.
Flood insurance.
Good luck getting insurance.
You can't even find it. Forget
Yeah.
about how much you pay.
It's and the amount that you're paying for escrow, you don't realize is the highest part of your mortgage. It's higher than the principal and the interest in a lot of cases if you live in a high tax area like I do also.
Exactly.
I mean, between the insurance and the property tax, it gets ridiculous.
Yeah, but then you also have landscaping, and you have, there's
And
a
why do
ton of-
landscapers, I just got my bill from like June.
You know what
till-
really
What's the deal with
grinds my gears?
What's the deal with landscapers? Why is the bill so high? My lawn doesn't look better. No, but they bill you in like 4-month intervals, and you look and it's like $1,000. I'm like, what happened to $25 a week? Like, how did that become $1,000? And then you look at all the line items, and you're like, oh man.
I am finding though that buyers are more educated today than maybe they were. Where
Is that
I'm
because they've
speaking
had
to-
more time to educate themselves?
I think there's more information out there.
Access to information,
They definitely
yeah.
have time. Where a lot of clients that we
Or do
spoke
they
to,
watch the show?
They might be subscribers. People that we spoke to a year ago, when rates were 1% higher than where they are now, weren't so ready to buy a home. They're like, look, if you find the perfect place, we'll buy, but we're probably a year away. We still have conversations like that all the time.
You should
with people.
record those, and then when you call them back a year later, you'd be like, look, you promised.
You promised, exactly.
Is that hold
Sign
up in court,
Yeah.
Buy a
Shar?
home.
What people love to find out is that you're recording their phone calls.
But yeah, no, I think when the time comes and they know their lease is due in May or June, now we're having conversations with them. They're really prepared, and there isn't that price shock at this point.
Yeah, I think that's one of the things we talked about, when we had the live podcast with Bess, was that
That I'm still hoarse
you're
from.
still hoarse from. No, that was the second one that we had.
Oh, the second one. Yeah, I was
But
hoarse
the
from
first
both
one
of
that
them.
we had upstairs here was that, I sort of thought 2026 was going to be the year of being normal, where there wasn't going to be so much fluctuation.
on, let's roll the tape
we were
on
going
that
to
one
have rates constantly going up and down. Like, people knew where they were going to land as far as their monthly payments, what they can afford and what they can't. And I think that makes it easier for them to make those decisions
100%.
as well. And obviously, it's like people need to just talk about it. That AI and people doing their research on ChatGPT, it helps a lot in that you don't have like that person calling you who has zero information. But a lot of times they spend too much time on it, and they end up focusing on things that don't really become so much
Paralysis by
of
analysis.
an issue.
It's
Yeah,
just-
so
for sure.
it's a double-edged sword. It hits on a lot of important things. And the first time you explain it to them, it's not the first time they're hearing it, but you need to sort of be able to get them out of this mold of what they've created in their mind as being, obstacles to buying.
Well, speaking of AI, we all we've been hearing is like entry-level business jobs are going to go away. Like these graduates, like my son will be in 3+ years, will be out there and there'll be no jobs because AI have taken them. But now there was an article on CNBC last week. Now high-income workers are worried about this. I wasn't until I read this article that they're worried. They're more afraid for their jobs right now than lower-income workers because you want to be a more profitable company, you cut the people making the most money.
Absolutely.
Just like on sports teams, you want to dump salaries, so you can go get more affordable players. And it's called AI fear. It's probably a million terms for this. But that it is interesting that their confidence in the labor market, they're the ones making the money.
Right.
And they're the ones that are afraid right now because they've been felt untouchable. Now, should I be concerned, Shar? As my attorney,
This week happens to be very busy for me, so I can't do it this week. But I will try to write an article similar to The Line in
Like you could
in the
ever-
next month or so, using
don't
AI.
set your standards so
And
high,
then-
your goals so high.
and
Start
then-
baby steps, Shar.
and then
If
we'll
you got a
send it
baby,
out.
do baby steps and
See if anybody see if anybody realizes.
what if that you wrote it or
Yeah.
if it was AI
Yeah,
generated?
no, we won't actually send it out. But let's put it to the test. Let's see if we can get ChatGPT to write an article that's of the same caliber as yours.
All I know is we were.
It won't have your wit and humor. I have to give you that. Like,
Well,
you're very funny in the
I-
articles.
Well, all you need to do is put maybe the last 10 articles in so they can kind of figure out his cadence and
Yeah.
humor and all that, and then you can.
Well, that was a
spit it out.
joke I made in the comments. Like, can AI really replace me? And I don't think you can put, you look at the videos that are being generated, there was a thing in the Post today where they had pictures and you're supposed to guess which one is real and which one is AI, and you can't do it.
Yes.
Look, we've talked about this before. There was a hedge fund manager that I spoke to who said AI is not going to replace people. AI will replace people who don't embrace AI. And I think that's very true. It's kind of learning how to work with the technology. I will say, though, there are people high up executives at these AI companies who are leaving, and they're scared about what this can do. And I remember that was like when Steve Jobs didn't allow his kids to have an iPhone. Yeah. It's like the guy that's making this iPhone is afraid to have his kid have it.
I heard I read an article, this is probably a year and a half, maybe less than a year ago. It was a guy at a company overseas that got a request from his CEO to send a wire out for several $1 million. I don't remember the number. I feel like it was $4 or $5 million. And he responded back to the CEO. He says, as you know, we have procedures in place to protect us from fraud. I'm going to call you on a phone number that I've previously confirmed as being your phone number. And he goes, better yet, let's do a Zoom with the board of directors of the company. He said, that's great. So he gets a Zoom link, goes onto a Zoom or whatever video program they're using, and he sees the board of directors, a room of 9 people, and the CEO proposes, explains what's going on, and everybody at the table agrees that the wire should be sent out. He verbally confirms the wiring instructions, sends the wire, and immediately gets a call from HR or whoever saying, what is this wire you sent? And it turns out that it was all manipulated videos and emails. They weren't real. It was all AI videos where they manipulated this guy.
So this is the problem. You flip through social media and you see babies like dancing, and it's one that's hysterical. The baby's doing stand up in his diapers. I mean, it's unbelievable. It's unbelievable. I don't believe anything I see anymore.
My dad asked me to download ChatGPT from him a couple of weeks ago, and he goes, "What does it do now?"
Does he argue with it? Because I could see my father would have done that. He would have just gotten into an argument and broke the computer.
Even better, I asked ChatGPT to like search me and see what I do, and it came up and pretty much made me look good. Didn't mention the podcast, so I need more credits when you publish these. But then I asked it to create a picture of taking a shot with the Shah of Iran, because we're of Iranian descent, and he looks at it, and the confusement of his face, on his face, he just couldn't comprehend. And we showed it to another somebody else in the family. He goes, "Is that real?" I'm like, "No, it's not real."
See, now to punish you for doing that, we're gonna get a bunch of Gen Zers that work here, and they're gonna just make fun of you all day long. They're gonna hijack your social media. They're gonna tell you.
I have to imagine regulations are going to be put into place.
It has to be watermarked.
Well, they've talked about federal, guidelines on this stuff, but
also for an attorney's perspective, and making sure you are a licensed attorney to put a contract in place where AI, some 20-year-old can't just go into AI and draft a contract by themselves, and it's being an enforceable contract. Someone being a real estate agent, someone has to be a licensed real estate agent to be able to sell real estate.
Absolutely. It'd be like a non-economist running the Fed. Oh wait, we already have that. It's tough because, people say, you could say AI is being overhyped. We were told that machines were going to run the world and they were going to build everything. But it costs money to build robots to make cars and other stuff. This software is already there. It's not a huge investment to buy licenses.
During the .com boom, do you remember very similar conversations taking place at that time?
Not about AI, but
no. Just in terms of jobs being replaced or going away.
Well, you always hear that nobody's going to need this anymore, nobody's going to need that. We thought we'd have flying cars by now.
Yeah.
I mean, let's be
honest.
You
can go back. I think I mentioned this a while ago. You can go back to the printing press. You can go back to the assembly lines. Every time there's an advancement of this caliber, everyone always says, that's it, no more jobs. But they create so much more wealth and opportunities for people that you just need to shift gears into it, right?
Well, the problem is the biggest resistance to this kind of change comes from older people, who are the people that have the majority of the money. Right. And that's why these things don't go away. That's why you still see flip phones. Mm-hmm. You can still go to a cell phone store and get a flip phone.
Right.
So I think that yes, like you said before, you have to embrace the change. It's going to happen. And if you don't, you're going to be obsolete very quickly.
And I think people will crave a human connection. Like
that has to be part with what you guys do, what real estate agents do is a relationship-based business. Nobody wants to talk to a program.
Mm-hmm.
And the one thing I've noticed, so I'm not so worried about my job just yet, is that we've viewed some platforms and listing systems that have auto-generated text.
Yep.
You run an analytical thing and it writes. The text is so long and not to the point. It's stuff that that's the nuance I haven't seen yet.
Mm-hmm.
I know that when I write a report, it's bullet points for the most part. The less is more because people don't want to read anything.
Right.
And it gets lost. Like this stuff's one long paragraph sometimes. And then people say, well, give it a month. It'll maybe that's true.
It's also an opportunity to sharpen your skills as a salesperson, a professional, because Shar does a great job for a buyer or a seller. They're going to tell their friends, you have to call Shar. Forget ChatGPT, forget all these AI models. Call Shar. He's going to help you with the transaction. And the best real estate agents are protected from AI for that reason, because they're great at what they do. And for those that are worried about this kind of stuff, once you sharpen your skills and become great at communicating and understanding the market on a level that gets people to make a decision, an informed decision, you're going to get referrals that way. And I think that's, looking at what's happening right now, it's an opportunity for people to really sharpen their skill set.
Well, I think over my, 34-year career as an economist.
You're looking at Shar to get confirmation.
You think of the way how things have changed. Some things have changed dramatically. Some things have not changed as rapidly. I'm still using Excel. Well, maybe I was using Lotus 1, 2, 3 in the beginning, but I'm still using Excel. I'm still using Outlook. We had email when I started the government in 92. We had to make sure we had hotel rooms where we could plug into the phone jack because everything was dial-up.
Yeah, but not everybody had emails in 92.
No, but I'm saying I suspect some ways I've expected a lot more change, but then you look at the technology that we have. Like my son has never had to watch a commercial, basically, and he's 18. He's never had to do that. The whole on-demand function of everything now.
I thought we would have hoverboards after Back to the Future 2. Like that was like my dream.
That movie wasn't good though.
I loved it.
The first one
one was,
and the third one is good.
No, I like the second one better than the third one. Anyway,
it's terrible.
Do you know what hoverboards are?
Yeah.
Okay, sorry.
No,
it makes you sound like you're 12 sometimes.
See, this is what happens.
Cut that out, right?
When our hair ratio is off because he doesn't have a beard, he's gotten a haircut, and
I'm never shaving again.
Well, how long does it take to get that stubble on your face there, Scott?
I shaved this morning.
I shaved on the way here. No, I it's funny because I couldn't grow a decent beard till my 40s, and then I just got
making fun of me.
No, and then by the time I was able to grow one, it was all gray, and I'm like, am I trying to look older? And then you just give up, right, Char?
I didn't mind.
That's in there,
I didn't
though.
mind losing my hair. The gray bothered me a lot more than it, but I've embraced it.
Okay.
My wife loves it. I don't care about anything else.
Well, if she can love you, she can love your hair. I mean, let's be honest. I think that's it. Did we miss anything? Lena, did we miss anything? No. Okay. Well, just for fun, on the end of this month, we'll be celebrating our 100th episode.
Woo. Are we doing anything special?
I don't know, but what do you got in mind? And will you pay for it? That's the important.
There's a nice bottle of Glenfiddich in your office.
We know we do. We'll have an episode. We have to drink it by the end of the episode. We have to finish that bottle a single more.
I will clear out my morning for you.
Morning. You better be afternoon, night, day after. So yeah, no, it's funny because I haven't changed. I've been part of the show, but now we have this nice studio, the furniture and everything, and I sort of think I know what I'm doing. Same bobbleheads.
Where were the first couple episodes filmed?
Here, but it was a different setup. It was up against the wall. We had a picture of the 80 Olympic hockey team and Alfred E. Newman behind me. Now I have Alfred E. Newman here.
Were you both here also?
Yes.
Yeah, they've been here since the beginning. We've gone through a couple of different co-hosts and a lot of special guests over 100 episodes almost, and now I'm stuck with you guys most weeks. So, and I couldn't be happier.
We need to find a celebrity to come on one time for you.
I'm the celebrity. That's the way it works. Well, you know what? Next time you're chatting with the Knicks with your tickets, see if you can get. I'm not even gonna say Brunson. Maybe get OG in here. That'd be kind of cool.
OG would be great. Yeah.
And by the way,
He's not a talker.
Honestly, Kat would create some great memories. You might not be our favorite.
well, when you were gracious enough to let me and my son use your ticket, those are the two autographs Gregory got were Kat and OG. And OG, yeah, it's funny. My son said as OG was signing his jersey, he said, "I got this jersey the day after the Knicks got you," and he's like, "Thanks." And then,
That sounds about right.
look, rebound.
I think Josh
play
Hart would
defense.
probably be the
But
best person.
Kat was very nice. He was happy to take selfies with everybody.
My partner was there yesterday with his son. He said
Big
Kat
win.
walked around the entire stadium signing autographs.
He seems like an incredibly nice guy who has a murky relationship with Knicks fans because there's some games where you scratch your head at what he's doing.
I don't think we can win with him. He's a nice guy. I don't think we can win with him.
He's second in the NBA in rebounds.
He doesn't play defense, and you can't. Who are they?
All right, so
the other night that
wait,
took
just
5
in
shots?
conclusion
Not to get
here.
started with this now.
Well, let me talk to the basketball star here. Is it rebounding defense? People say he doesn't play defense. He's second in the NBA in rebounds. Do we just say that doesn't mean he's a good defender?
Does that get you? Does that deserve you max contract? Just because you're number 2?
Oh man, I looked at his salary cap hits. You're talking about $60 million.
Rebounds is a different skill set than actually stopping your man from scoring and playing help. He's when you watch like Jokic, for example, or guys like that, they're like a half a second ahead of everyone else. Kat seems like a half a second behind everyone else.
Well, he's also,
like his
he's like
defensive
Powell.
rotation.
He's reactionary. He's not.
Oh, now you're bringing that.
That's what you
We're
like,
bringing full
right?
circle. Yeah.
No, he also fouls people a lot.
Because he's like a half a second slow. He's like late to rotations. Yeah, he's an incredibly talented player. He's incredibly talented.
Man, he
but
hits
him being your
those
second
threes,
best player.
And he's good.
Jalen Brunson is going to be eligible for $80 million a year on his next contract. It's insane, $80 million a year.
It's funny because the best players in the NHL make about $15 million.
Right.
When you think about it, it shows you the disparity. But it's all about demand, and the NBA is a global phenomenon.
Brand also, each player is its own brand.
Yeah. Now it's all right. Well, that's the show. Thanks, Ray. Thanks, Lena. Thanks to Shar and Scott for sponsoring the show and being adequate co-hosts. And well, thank you for thanking me, and happy birthday to Mrs. Shar.
Thank you very much.
Do you want to say any special message?
She had a beautiful day, so she takes her birthdays very seriously, and I think I came up, clutch.
You got to have a game because it is you here. You got to be very nice.
Started with cheesecake in bed with my son. And it's only uphill from there, right?
Does your son eat cheesecake?
He did several times yesterday, and he woke up today asking for it again today.
Well, we don't have cheesecake for breakfast every day?
Exactly.
All right, well, I'm glad she wish her a happy birthday from a fellow Pisces.
I will. Happy birthday to you. I hope you have a good year. You be healthy, you be successful.
I'll settle for healthy at this point.
That's right.
Trust me. From snow blowing, all that thing, the arthritis in my hands has gotten so much worse. But have a great week, everybody. We will see you next week. We promise 2 weeks in a row, you won't know what to do with yourself.
That'd be great.
Their phone or always leaves your text on red. Leaves your text on red.
Built this working group with $1,000 loan.
Tell us a little bit about how you actually came from.
Welcome to the build-up, John Roa.
Thanks for having me.
We're coming to you here from Studio 1873.
It's not 57% over. $27 million.
So then, cheers.